Worries about a possible artificial intelligence bubble have put pressure on investor confidence throughout recent trading days. Even with unease surrounding lofty valuations, many on Wall Street continue to favor several artificial intelligence names because these companies are delivering strong expansion and signing valuable agreements that help solidify their standing in the industry. Using the TipRanks stock comparison tool, Vertiv Holdings, Palantir Technologies, and Nebius were evaluated side by side to uncover which one analysts believe offers the greatest potential upside. Although Vertiv faced tariff headwinds and softness in the Europe, the Middle East, and Africa region, the company still raised its full-year outlook thanks to a healthy backlog and continued momentum in artificial intelligence infrastructure demand. At the same time, the business is continuing to strengthen its capabilities through strategic acquisitions. Earlier this month, Vertiv revealed that it acquired PurgeRite, a specialized fluid management services provider, in order to expand its liquid cooling offerings. After the Q3 announcement, Evercore analyst Amit Daryanani lifted his price target on Vertiv shares to $210 from $200 while maintaining a buy recommendation. The five-star analyst highlighted the impressive Q3 performance, which included 28% organic revenue growth. According to Daryanani, the quiet stock reaction following the earnings release likely stemmed from a flattish Q4 earnings before interest and taxes margin forecast. He clarified that earnings before interest and taxes guidance was pressured by rising tariff expenses and larger fixed costs because Vertiv accelerated certain capital expenditure initiatives from early 2026 to December 2025. Even with those factors, Daryanani believes Vertiv is primed to deliver faster revenue expansion in 2026, breaking from the 10 basis point slowdown expected by the broader market. He was also encouraged by the 60% jump in Q3 orders, which was fueled by strong artificial intelligence data center engagements and a backlog worth $9.5 billion. Additionally, he acknowledged that Vertiv anticipates a rebound in its Europe, the Middle East, and Africa segment in the second half of 2026 as artificial intelligence inferencing infrastructure begins rolling out more broadly. With 15 buy ratings and 2 hold calls, Vertiv Holdings carries a strong buy consensus. The average Vertiv stock price target of $199.75 suggests an upside of about 18.3%. Moving along, Palantir enters the discussion with strong momentum of its own. The artificial intelligence-powered data analytics firm posted solid Q3 results and offered upbeat fourth-quarter guidance. Yet valuation worries weighed on the stock afterward. Even with a 5.3% dip across the last 5 trading sessions, Palantir shares are still more than 114% higher year-to-date. The company reported a 63% surge in Q3 revenue to $1.18 billion, driven by strong demand for its artificial intelligence platform across its government and commercial divisions. Palantir lifted its full-year outlook to reflect accelerating adoption of its artificial intelligence tools. Still, the stock's valuation remains a significant sticking point. Palantir currently trades at a forward price-to-earnings multiple based on adjusted earnings of 213.9 times compared to the sector's average of 22.5 times. Following the Q3 results, Goldman Sachs analyst Gabriela Borges raised her price target on Palantir to $188 from $141 while repeating a hold rating. The four-star analyst observed that the muted reaction following earnings stemmed from already elevated expectations and the stock's powerful year-to-date rally. She emphasized that Palantir continues to capture a larger share of customer budgets, reflected in rising deal sizes and growing revenue per client as organizations shift from experimentation to full-scale artificial intelligence platform deployments. Even though Borges anticipates Palantir continuing to secure a meaningful portion of artificial intelligence platform expansions, she remains cautious due to long-term ecosystem risks and the stock's steep valuation. At the moment, Wall Street maintains a hold consensus rating on Palantir Technologies, based on 11 holds, 3 buys, and 2 sells. The average Palantir price target of $187.87 suggests an upside of about 15.8%. Finally, Nebius enters the spotlight as another fast-rising artificial intelligence contender. Backed by chipmaker NVIDIA, Nebius has built large-scale graphics processing unit clusters across Europe and the United States and offers a full-stack cloud platform. The company's Q3 revenue growth of 355%, its $17.4 billion graphics processing unit as a service agreement with Microsoft, and its $3 billion arrangement with Meta Platforms have fueled investor excitement around this artificial intelligence intelligence infrastructure provider. The company recently revealed that it sold out its entire available capacity during Q3, showcasing strong business momentum. Nebius is working aggressively to expand its capacity to meet demand from its newly announced large-scale agreements. It is securing additional sites to raise its total contracted power to about 2.5 gigawatts by the end of 2026, up from its earlier target of 1 gigawatt. In recent weeks, Citizens JMP analyst Gregory Miller initiated coverage of Nebius with a price target of $175. Citizens JMP issued buy ratings to 5 companies that began as Bitcoin miners, arguing that they now provide critically scarce power capacity for high-performance computing and artificial intelligence workloads. Referencing Nebius's collaborations with Microsoft and Meta platforms, Miller explained that these partnerships highlight the company's ability to serve as a key provider of artificial intelligence-driven services for a wide range of clients, not only massive enterprises. The 4-star analyst added that these agreements also suggest that Nebius's connections to Russia are viewed as sufficiently severed from a security standpoint. Currently, Wall Street assigns a strong buy consensus based on 5 buys and 1 hold. The average Nebius price target of $164.20 points to an upside potential of 78.7%. Nebius shares have soared 232% since the beginning of the year. Even with widespread concerns over a potential artificial intelligence bubble, analysts remain optimistic about Vertiv Holdings and Nebius, while taking a more cautious stance on Palantir. At this stage, Nebius appears to offer the highest upside potential among the 3 artificial intelligence names, supported by strong infrastructure demand and its recent agreements with Microsoft and Meta platforms. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.